Yo, what's up, everybody? It's Tuesday, September 26th. Nice big down day in the market today. Actually, we needed to see this happen because I took a look at some of the commitments of traders data from the CFTC and noticed that institutional asset managers are the most long S&P futures in over 2 years. Okay, 863,000 contracts. That was as of last Tuesday, the 18th of September. So there's definitely some liquidation going on. Of course, the underlying condition, which I told you guys about leading up to this, was the tax drain on September 15th. And I said this was going to happen. I said we're going to, be in for a volatile period in the market based on this tax drain. Yesterday, if you recall, my video said we will be up this week. Today, actually, I think was a good buying opportunity. The market was down a lot. I'm sure we are going to see in the weekly sentiment survey, AAII weekly sentiment survey, I'm sure we're going to see a big increase, a spike in bearish sentiment. Okay, I'm very curious when that comes out. That comes out tomorrow, actually, but we won't really get the data till late tomorrow night. I send that out. I send out a whole analysis and a breakdown of that data every week to my subscribers, and I'm pretty sure we're going to see, because what we've seen up until now was a very high level of neutrals. People who were neutral, and I've been saying, you got to see those neutrals move into the bearish camp. If you see those neutrals jump to the bearish camp, that's a good contrary indicator. Now, I've also said to you guys, it's not just about simply looking at sentiment. I mean, that would be great if things were that easy, but it's about looking at these flows. Again, to repeat myself for the millionth time, the flows are the first derivative of everything. That sets the conditions for the economy, and therefore that sets the conditions for the market. Now, yesterday, when I made my video saying that I think we're going to end this week higher, it's because as we get towards the end of the week, we're going to get the first of the month big payments. That's Medicare, Medicaid, military pay, veterans benefits, disability, all that stuff. That's going to come in on Friday, because Friday is the last business day of the month. Normally it comes in on the first of the month, but this time October 1st falls on a Sunday. So the government pays it on the last business day of the month if the first falls on a weekend. All right. Tomorrow we get a Social Security payment. We are currently 74 billion negative from that tax drain. It actually went up yesterday. Yesterday we had like a 16 billion drain. So, we were negative 58 billion, but yesterday we had a 16 billion additional drain. So that kicked it up to a 74 billion. We got to recover that. But I think by Friday, most, if not all of that is going to be recovered, because these first of the month payment days right there, that's a 50, 60 billion net flow. And tomorrow we'll get like a 24, 25 billion net flow with the Social Security. So we're going to be it should eliminate that drain on Friday. So I think the market will tend to move higher. Now, of course, we got this government shutdown to potentially deal with. The Senate has come up. I saw some news today that the Senate has come up with a plan to avert the shutdown, but it has to be approved by the House. Both houses of Congress have to reconcile the bill, and I don't know if that's going to happen. And I don't know if it's going to happen in time to get that on the president's desk. So we may have a short shutdown, may have a long shutdown. I don't know. We only know when we know, right? But I'm hoping for the best on this, in terms of the shutdown. I'm hoping if we get a shutdown at all, it's going to be limited and for a short period of time. I don't think it's politically expedient for either party, Democrats or the Republicans, to shut the government down. I think they're both going to take a hit from that, and I think they understand that. So I'm hopeful that this thing will get resolved. But let's get back to the flows, okay? Because that's the most important thing. Here's the thing. We'll get a pop. If I'm right about the upcoming first of the month payments wiping out that September 15 tax drain altogether, there's another tax drain coming up on October 15th. So we're going to get this choppy action and maybe like a double bottom in the stock market. You could get a bounce here and then another sharp sell-off October 15th all the way into the end of October, maybe into even mid-November. November is when we get the quarterly interest payment. And again, this is just a seasonal time of year. The funny thing is that the media and some of these market observers, they call it the September effect, not understanding what is causing this stuff. This is a period where you get a drain, okay, then you get another drain, then you get a big transfer from that quarterly interest payment, then you get another drain in December. So this is classic, a very volatile time of the year. It's not something it's not something to be afraid of. It's not something to try to conjure up some hocus pocus reason as for why it's happening. If you understand what's going on right now, and again, all these things are on the calendar, they're very, very predictable. If you understand what's going on right now, number one, there's no way you should be scared or afraid from this. Number two, you should realize that there's an opportunity here because we're still in the overarching bullish scenario based on very strong flows, which are not going to come down. And number three, if you're trading oriented, it sets up nice trading opportunities. You go short around September 15th. Now you look for the bounce now. Then October 15th, again short. Then November, you're coming back up. Then December, mid. So you see, even as I describe it to you, the conditions that we're going into all the way through the end of the year, you may say, well, what the heck is this guy? He's going up, down, up. But it's all calendar based. I'm not trying to confuse you. Believe me. I'm trying to help you. I'm trying to clarify it for you. It's just, this is that seasonal period where all this stuff happens. You just have one thing after another lined up. Okay? And I think it's the October 15th thing that throws people off, because these quarterly tax drains, they're very, very predictable. All right? And the quarterly interest payments, again, very predictable. We know when they're going to happen. But you throw an extra one into the works, like the October 15th individual tax drain again, that just, it shortens the cycle, it makes it choppier, and that's what gets people. See, people who don't follow this stuff, which is basically everybody, which is like 99.9, everybody, let's just say everybody other than you guys here on this channel, they're making up like cockamamie reasons for why this is going on. But that's fine. Let them do that, because it's better for us that they don't really understand. I see all kinds of things like this is, the 2000 sell-off all over again. It's not. 2000 was a completely different set of fundamentals. In 2000, the Clinton administration was running massive budget surpluses. What is a surplus? A surplus is literally the government sucking money out from the non-government. So if the government runs a surplus, by definition, the non-government, that's us, that's the economy, our surplus goes down, equal to whatever the government surplus is. If the government surplus is 250 billion, or if the swing went from, let's say, a 250 billion deficit to a 250 billion surplus, which it was something like that, that's a 500 billion drain, a half a trillion drain from the non-government, from the economy. And back then, that was a lot. I mean, now half a trillion is like normal, but back then that was enormous. And that was the condition that existed back then. And Clinton celebrated that, and his whole team in the White House celebrated that. And people thought, yeah, that was a terrible thing. Terrible thing. There's only one way the government can run a surplus, and that's by taking it away from the non-government. We need that money to pay taxes. We need people save in the government's currency in dollars. So it's a terrible, terrible thing. And unfortunately, that mentality persists today. I mean, we hear all the time really about, we got to have a balanced budget amendment and this and that. And I saw McCarthy, the Speaker of the House, now caving into the very far right Republicans who want major spending cuts in social programs. I mean, this is awful. The level of poverty, if that goes through, and I don't think it's going to go through because Biden would have to sign that, and I don't think Biden's going to sign something like that. And I don't think that would pass in the Senate either. But if that went through, cuts to all kinds of things, to the social safety net in general, I mean, you're going to look at massive, massive increases in poverty in the United States. And it's really, really disgusting when you look at it, even the fact that it's being proposed against the backdrop of billions upon billions upon billions being given to Ukraine. I mean, we need to help our own people here in America. And cutting the social safety net is not the way to go about it, in my opinion. That is draconian, that is cruel, that is unnecessary, that is brutal. And if you want a dystopian society, that's a very good way to achieve that. So I can't even believe that is being proposed. Cut defense. Cut giving the money to Ukraine. There's so many other things that you can cut. But doing that is cruel, and it's brutal, and it's just going to create a hellish society. Is that really what we want as citizens living here? No, I don't think so. I do not think so. I for one do not want something like that. Anyway, that's it for today, folks. Don't forget, go to my website. You can, all this stuff I talk about with the fiscal flows. If you buy my course, Understanding the Daily Treasury Statement, I show you how to parse through that information on that video course. And you could keep a running tally of this on a spreadsheet. It's very easy. It's addition and subtraction. It's just knowing what line items to keep tabs on, and how to work those into a spreadsheet to come up with these numbers every day. If you understand these flows, again, that is the first derivative of everything, folks, of everything. All the other things are second and third and fourth derivatives off of these flows. So if you understand that, you are way, way ahead of even the most serious people on Wall Street, who are not really, they might think they're serious, but they're not. They're clowns. All right, folks, have a good one. See you tomorrow. Bye.